Hey everyone, welcome back. It is Michael with Offshore Citizen, and we are going to talk today about the subject of Bitcoin and cryptocurrency more broadly and the correlation. Okay, so what's this all about? Well, historically, we had a few major asset classes that we would look at. We would look at stocks, we'd look at bonds, we'd look at real estate, we would look at commodities, and you get into specifics within there, right? So you can have different industries within stocks. You have gold, you have oil, you have so on and so forth, right? And a few years ago, obviously, we got this cryptocurrency thing that was introduced as some people saying it was a new asset class, okay? And there was a question of, is it a new asset class? How does that work, right? Well, how will it perform? And there was a theory for quite some time that it might respond like digital gold, that it might be a safe haven asset. And the reason for this is quite logical. It's that there's a limited quantity of, say, Bitcoin, right? So you can have a maximum of 21 million Bitcoin. It can't be inflated in theory, right? So as a result, it might perform similarly to gold as kind of a safe haven asset. What's interesting is today it's March 17th, and we're going into, or we've just gone into an environment where we got to test that theory and see, how does it perform relative to things like stocks. And we have found not at all has it behaved in a way that's non-correlated. In fact, it's been very tightly correlated. And I wanted to take some time to explore what the likely drivers of that are and how you can expect Bitcoin and cryptocurrency more broadly to behave relative to other asset classes. Because what I find is that when you study something like correlations, people create these blanket rules, right? Like, hey, bonds and stocks are reversely correlated. When bonds go down, stocks go up, and vice versa. And then you get something like 2008 where they both went down and they also both went up. So, it doesn't really make much sense if that was your model of the world. But if your model of the world is to understand what are the underlying drivers and figure out correlation not based so much on how things behave relative to each other, but how they behave relative to certain events or certain triggers within the economy, then all of a sudden it makes a ton of sense, okay? So what can we say about cryptocurrency? Well, cryptocurrency is highly volatile. It's highly speculative right now, okay? And this means that when we saw, what did we see starting kind of early March, was that as stocks started to go down, as the fears of coronavirus and then followed by oil, et cetera, happened, far from people fleeing to the safety, supposed, of Bitcoin or cryptocurrency, these things plummeted, right? We went down massively. At one point, I think we were down like 60% in a day on, various ones, but over 40% for sure in Bitcoin. And Bitcoin's, supposed to be the most stable of them, pretty much, aside from stable coins, right? So it's like, wow, this is an enormous drop. And it paralleled kind of some of the biggest drops in the S&P. Now, of course, you have variations in the degree of volatility, but the general pattern has been quite similar. In fact, literally to the point where sometimes I sit there and I watch the futures market on the S&P or the Dow Jones in order to see what Bitcoin is likely to do coming up, or vice versa, paying attention to what's going on with Bitcoin to pay attention to, okay, are we hitting some turning moment? And this is like extremely, within 15-minute windows kind of thing, right? Very, very tightly correlated. And now, what we've noticed is that in these days when the market's done better, following the idea of bailouts and things like stimulus, et cetera, that correlation hasn't followed. It's kind of departed, and this all tells us something. So I think what's important is you have to start by understanding investor behavior, okay, and why people are doing the things they're doing. All right. So in times of uncertainty, the tendency is to pull out and to go into some place that is certain. Right now, certainty arguably is bonds, cash, and maybe to some extent gold. We've seen some kind of interesting price moves with gold, but in general, it's gone up over the last, for sure the last year, but even over the last few months, okay? So if you're just saying, hey, I'm uncertain, I'm worried about losing out, I want to stay away from the volatility right now, would I, under any means, want to put my money into cryptocurrency, which is highly volatile? No, absolutely not. On no planet does that make any sense, okay? So in that sense, if we're talking about flight to safety, the question is safety from what? If the safety is from volatility and uncertainty, then cryptocurrency is probably not a good place to be, and you should expect it not to perform accordingly. On the flip side, as certainty comes into the markets in terms of stimulus, in terms of quantitative easing, and bailouts and all this kind of stuff, we would expect there to be less correlation because people weren't buying Bitcoin, or they weren't fleeing Bitcoin in quite the same way that they were fleeing, say, stocks, right? In stocks, you have, hey, I'm worried about earnings dropping. I'm worried about bankruptcies. If I'm looking at bonds, I'm worried about credit defaults. I'm worried about interest rate fluctuations. I'm worried about inflation, right? These things. So where I would expect Bitcoin to perform well is possibly on inflation. If we were to see a rise of extreme inflation, I think there might be a reasonable chance that that's a driver, and you might see it perform similar to gold in that respect. You may see a flight to cryptocurrency, and in particular Bitcoin, and a resulting boost in the price. The second thing that I think is interesting is a flight from some sort of like government control, political instability, etc. And we've seen this with markets like Venezuela, with attempts to get around the capital controls in China, with the situation, they'll actually use it legitimately in Africa and places like this. So if you just think about it, hey, what is it that somebody can't seize from me? What is it that I'm not worried about having exposed to political uncertainty the same way as some of these other things? Well, that would be cryptocurrency. I can put it on a cold storage wallet. I can have access to it anywhere. Unless you have my key, you're not going to be able to gain access to it. This is pretty strong, right? A pretty decent hedge against that type of thing. Now, the problem is, of course, that's a very unlikely occurrence in most of the world over the majority period of time. So the likelihood that you see this massive spike on that basis, you either need a lot of fear-mongering, maybe fear-mongering is the wrong word because it's not necessarily, maybe it's not like unjustified fears, but a lot of kind of media/social fear about sort of government clampdowns, controls, etc., and this is a response to that. Or the flip side that you could get is actual genuine societal civil unrest, societal breakdown, societal clampdown, instituting martial law, extreme hyperinflation, etc., right? Now, whether that drives the price up or not is a question of volume, right? So the argument somebody could make is, well, the Venezuelan currency hyperinflated and a lot of people started going to cryptocurrency, etc., but we didn't see cryptocurrency prices inflate. Well, it's a low volume area. We would argue that the majority where you have seen the high volume and affecting price is more the Chinese market, right? More that space. And again, you have kind of some of those similar concerns, right? You have a concern that, hey, look, government can come in and seize assets. We have exchange controls. We have recently saw it introduced in Lebanon. So that's something. The other thing that I think is worth understanding, and again, just going back to investor behavior, is who are the people who are buying cryptocurrency, and are they buying it thinking this is a safe haven? I think there the answer is quite clearly no. And because of that, their pattern of whether they're buying and holding, getting in and out, etc., is going to be fundamentally different than somebody who's hedging against these extreme events, inflation, etc. Although the story that's built, the narrative is, hey, part of the reason why cryptocurrency is going up is because it can't inflate and so on and so forth. In reality, the majority of the people buying and holding cryptocurrencies are doing so on a highly speculative basis, based on the idea that they're going to have a Bitcoin go at to 20,000, 50,000, 100,000, whatever number, right? And so therefore they're going to make very high returns in a short period of time. Well, that's not that different than the reason somebody would buy Netflix or Tesla stock, right? You're doing your analysis, you're saying, hey, look, I believe this is the case. And so if I got in at a low cost basis, probably I'm just going to hold, right? Or especially if I have a long-term view of it. And if I got in at a higher cost basis, thinking this was the case, I'm going to sell. As soon as I'm like, hey, look, the opportunity isn't there right now. I'm pulling my money out. I'm going to put it somewhere where I think there is an opportunity. So anyway, hopefully that gives you a bit of a sense of what the drivers are behind this thing, how we would expect Bitcoin and cryptocurrency to behave, what they would be correlated to, which is other assets that are functioning kind of the same way. And if you've got questions about that, reach out to us, subscribe, share this video with friends. It's always helpful for us. If you like our videos, please share them. It goes a long ways. Like them, and I will see you guys on the next video.